The numbers feel like we've reached a plateau. The demand picture is finally beginning to plateau out. Is that the correct interpretation of the figures? Are we finally getting out of and into a new normal sort of post-pandemic?
Well, I don't think we've plateaued in terms of profitability or revenues. I think the issue for us is, we're still in the recovery phase from a financial point of view. There is more work to do, and I think there's good opportunity for the industry to move forward. We clearly have some challenges. Fuel costs remain stubbornly high. We're looking at a fuel bill of $291 billion, 31% of the cost base. That's higher than the normal, which we would normally sort of figure at around 27%. So we continue to see some issues there. But I think we're going in the right direction. Our industry is not one that is highly profitable in margin terms. So the best we've ever done was a 5% net margin in 2015 and 2017. So this year we're looking at 3.1%. So I think you can say there is further room for growth in the margin, but a lot of work that needs to be done.
What about further room for growth in demand?
The demand environment, I think, remains quite robust. You will hear comments from certain CEOs about slight softening in demand, particularly in the leisure markets. But I think demand, if we're realistic, is higher than we would have expected it to be. And the outlook in terms of certain markets which are still in recovery. So international travel from Asia is still recovering compared to where it was in 2019. And I think there is still scope for that to grow. Now, it's recovering slower than we had expected, principally because of the Chinese market in terms of international travel to and from China. But I think that's a timing issue, not a plateau. I think that market will continue to recover and get back towards 2019 figures, but it'll take a little bit longer than we had expected.
Outside of fuel, is the industry struggling to get costs down? You could understand why that would be the case, given the inflationary environment we're in.
I think that's important. Everybody has had to experience inflation. When I hear comments about people saying ticket prices are very expensive, actually all of the research we've done shows that ticket prices are just about keeping pace with consumer inflation. And that's ignoring the fact that our fuel inflation is significantly higher than what consumers would have experienced. And fuel is the single biggest cost element for an airline. So cost will always be an issue for the airline industry to influence or control. And I think there's more that we can do there. But we have seen inflation impact on just about every cost aspect of the industry.
But if the industry wants to put itself on a more sustainable profitability trajectory, does it need to do more on cost? Is that possible?
It's always possible. But
a significant step change in terms of the cost story, because your figures highlight the fact that the industry still struggles to make its cost of capital. If it's going to make that number, costs are probably going to be where it has to come through.
Yeah, I wouldn't say step change. I think it will be chipping away at aspects of the cost base. I think there's opportunities for us in terms of further digitalisation in the industry, automation. I think these are benefits that we've yet to fully exploit that are available to us. And that's one of the transformation projects that we work on at IATA. How can we assist the industry in taking advantage of significant changes in IT and digitalisation? And I think there's opportunities there for us. So this will be a continuing focus on all aspects of the cost base to ensure that we are as efficient as possible. But I believe there's more that we can do.
You've talked about kind of where the strength is. The US is an area that has continued to be very, very strong. It feels like it's still strong at the upper end of the market, but at the lower end of the market, things look like they're softening fairly significantly. Is that where we're going to have to start seeing, certainly globally, capacity coming out of the market?
I don't think we see capacity coming out. If I look at average seat factors across the industry, we're expecting them to hit about 82.5% this year. The record we've ever achieved was 82.6%. So we're very close to where we were. Now, capacity has been influenced by supply chain issues, but I see, the environment remaining pretty healthy. You will always see elements within the industry at a global level where there may be a little bit of overcapacity. But the analysis that we've done shows that the additional capacity that's gone into the industry has been very much in line with, if not slightly below, the demand growth that we've witnessed. So I wouldn't be overly concerned about that.
Is Is the current traffic numbers we're seeing in China, out of China, is that the new normal now?
No, I think there's scope for growth there. We've seen the Chinese market impacted by geopolitical issues as much as supply and demand. So we've not recovered anywhere close to where we were in terms of capacity between China and the US. I think that's an area where we will see further growth. That's been compensated to some degree by higher traffic between China and the Middle East, and then I think over the Middle East into the US. So people are still travelling, but they're having to take an indirect route because the direct services are not there.
Let's move on to some non-outlook subjects. Is the lack of availability of aircraft, new aircraft and engines, to what extent is that holding the industry back at the moment? Or is it actually, in some ways, a positive that it's actually imposing capital discipline on this sector?
I think that's a great question, and I think it's both. Depending on who you talk to, there are airline CEOs who are incredibly frustrated at their inability to get the aircraft that they've ordered into service, and that's delaying growth plans and growth opportunities that they have. I think in other parts of the market it's probably assisted the industry in keeping the growth in capacity in line with the growth in demand. So I think if I aggregate it over the industry, I would say maybe slightly positive. There's others who would argue it's negative, but it's not all negative and it's not all positive.
Do you think we're past the worst of it? Do you think the worst is still to come?
Yeah, it's interesting. Our assessment is that it's not getting worse, but it's not getting better either. So maybe it has plateaued. I see these problems continuing certainly through this year, 2025, and probably into 2026. So airlines are now factoring in these delays into their plans.
Yep.
Taking a longer term view. In the past we used to have to deal with a delay of a month, maybe 2 months, but now we're seeing delays of several months, or indeed in some cases years. So I think it's now been factored in. I think airlines' ambitions in terms of growth have been tempered as a result of the uncertainty around supply. So it's clearly having an impact on the planning cycle for airlines. And as I said, it's an issue of great frustration to some CEOs and probably an element of relief to others.
Is this where the industry focus is now? Last time we were talking about sustainability as being probably the main subject that we were focusing on. The supply chain seems to have taken over as that issue. How do these two factors interact?
No, it's still very much a focus on sustainability. Concerns about the supply of sustainable aviation fuel, the frustration that we're witnessing where governments have introduced mandates where airlines are required to use fuel that isn't available. France is a great example where they have a blending mandate. It falls to the supplier, the fuel supplier, to provide the blend of sustainable aviation fuel. They're not providing it, but they don't care because the penalties that they're facing, they're just passing on to the airlines. And, the airlines have no choice because it's a monopoly supplier. So we have these politicians arguing that they're taking these steps to improve the environmental performance. It's having zero environmental impact, and it's having a negative economic impact because it hasn't incentivized the suppliers to produce any more sustainable aviation fuel. They just merely take the penalty and pass it on to the airline because the airline doesn't have a choice. So very frustrating, and it's an area of great concern because obviously as these mandates increase, the level of fines will increase. And those fines are just being passed to the airlines in terms of additional cost. So I think what we see in Europe in terms of using a stick approach to trying to generate more supply of SAF has failed and failed miserably. Very different to what we're seeing, particularly in the US, where they've taken a view that the answer here is to provide incentives to invest in infrastructure so that we can see greater production of SAF, and that's what we're seeing. We're seeing, significant scale up in the production of SAF in the US. Still, well below what the industry needs, but that's where we're seeing growth, and we're not seeing any real development in Europe.
If we're flying around though in older aircraft, presumably the problem's only going to get worse over time. If we don't see new aircraft coming into the market, the idea has always been that you fly the most up-to-date, fuel-efficient aeroplane, and that gives you the best sustainability performance. Yet that's not happening because airlines can't get the aircraft that they need. Is the lack of available aircraft, lack of available engines, going to detract from the industry's efforts to reach targets?
No, it's not, because it's a small part of the pathway to net zero. The biggest element and the most significant contribution to net zero comes from sustainable aviation fuel. It will account for at least 2/3 of the abatement to get to net zero. So technology will have an impact, but it's not as significant as the impact that supply of sustainable aviation fuel.
You talked about the politicians, so let's talk about them maybe from a different angle. We're going to see a new administration in Washington, we're going to see a new administration in London, we're going to see a new commission coming in, new parliament coming in Brussels. What would your message be to those new administrations? Not about the sustainability side, but keeping the momentum this industry has right now on track. What needs to happen to keep the industry on track in terms of the momentum it's seeing?
Yeah, I think the critical issue is that governments understand the economic contribution that aviation makes. And nearly all of the administrations you've talked about are looking at challenges with growth in their economy. So how do you get growth? How can you stimulate additional economic activity? Aviation is part of that. I look at India. I was in India a couple of weeks ago. It's very clear that they understand that for them to unleash the potential that exists there, they have to rely on connectivity from aviation. They don't have a rail infrastructure that can do it, or a road infrastructure. I think in parts of Europe, and maybe the US, we take the contribution that aviation makes for granted. And I think that is a mistake. And with governments now being much more focused on ensuring that we can grow our economies. And we're looking at global GDP growth of about 3.2%. So it's not a bad environment. But within that global picture, there are certainly some countries, I think I would highlight the UK, given my experience previously of living there, where the economic growth has been extremely weak. And you see the Conservative Party, the current government, suffering as a result of their inability to get the economy moving the way they would like it. So aviation is a significant lever to unlocking economic potential and economic growth. And I think the more we talk to governments, the more they recognise that. And I think it's time for politicians in Europe in particular to look at what's happening in the developing world and to understand how aviation is contributing to the very significant growth that we're witnessing in some of these economies.
Consolidation is certainly a story in Brussels right now. Do you get a sense that the industry is being held back by the current Commission? Do you think there is a new body coming in? Again, what needs to happen to get the consolidation story? And do you think currently the modus operandi is to try and slow the consolidation process down?
I always see change as a positive. Change is an opportunity, and I think this is an opportunity for the industry. I still believe there's scope for consolidation within the European industry. It's highly fragmented. I think some of the proposals that are being made are being examined by the Commission. I know that remedies have been offered, and I think we've got to look at what happens if that consolidation doesn't take place, because the carriers we're talking about are carriers that historically have been very weak. Have limped along from crisis to crisis.
So what do you think would happen if the consolidation would not take place?
Well, I think some of these weaker carriers will get weaker and smaller, and some of them may even disappear.
And some of the other local carriers would take that capacity.
And that's what we've always said. If there's demand in the market, supply will be provided, and there's plenty of evidence of that. But it will have a big change in the economics of certain countries. Being served from outside of your country rather than served within your country or from within your country. So I think the decisions that the Commission is looking at and needs to understand, I think these are big decisions, and it will be important to get the right result. But I think the scope for consolidation in Europe remains quite significant.
Are we facing a growing turbulence problem?
I don't think so. I think this is where we need to understand the data. One of the issues I've looked at, we expect 39 million flights this year. If I go back to early, maybe 2000, 2001, we had about 20 million flights. So the number of flights has significantly increased. We're now flying more in certain parts of the world where turbulence has always been a factor. And therefore, it may be just as much a consequence of the increase in the number of flights that it is in terms of changing weather patterns. But I was a pilot for 20 years. I experienced turbulence during my 20 years of flying. It's not as if it's just developed. And we were always aware of certain parts of the world where you were going to be exposed to a higher risk of turbulence than in other parts of the world. So, I think we need to carefully understand what's happening, evaluate the data, and not jump to conclusions, but make sure that we're taking decisions based on the best available data.
What impact would a Middle East peace deal have, do you think?
I think for some countries it would be very significant, and obviously, everybody wants to see peace everywhere in the world. Nobody wants to see what's going on. It has had an impact on a number of countries. Egypt, Lebanon, in particular, if you look at the impact that it's had on travel there, and obviously, Israel as well. But in Egypt, they've suffered as a result of the war in Gaza, and same applies to Lebanon. So, we all want to see these issues end, resolved, and get back to a peaceful environment for everybody.
Would you like to see rate cuts from the world's major central banks? You talked about the sort of the cost of capital. Is that something that would have a meaningful impact, do you think, on this industry?
I think the level of debt that the industry has now coming out of the crisis is clearly significantly higher, and we're seeing an increase in real interest rates. For a while there, real interest rates were still being held down by the inflation, but as inflation has come under control, not fully resolved, it is now a bigger factor for the industry than it would have been when we were talking last year.
But would that be the biggest factor? Is that the easiest way to get this industry back to making its cost of capital?
If I look at the gap between our operating margin 6% and our net margin 3%, that's wider than we would normally expect. Typically, I would have worked at an industry level of about 2 to 2.5% margin between the operating margin and the net margin. So it is clearly having an impact on the industry.